بسم الله الرحمن الرحيم الحمد لله والصلاة والسلام على رسول الله أما بعد. Assalamu alaikum wa rahmatullahi wa barakatuh and good morning everyone. I take this opportunity to welcome all of you, more so to express my sincere gratitude to our speaker, Advocate Fatma Haruna Sangoro, who accepted to be with us this morning despite a very short notice. Dear participants, my name is Khalfan Abdallah. I'm a consultant on Islamic finance, as well as head of product development and Sharia compliance for Standard Investment Bank, Islamic Investment Banking Division, that is based in Nairobi. On consulting, I work with Abrar Consult, that is the organizer of this session. And Abrar Consult is a well-known consulting firm that advise and train on matters to do with Islamic finance and halal business, and also advocate for halal tourism in Tanzania and in Kenya. It is our great pleasure to start this year with this very interesting development, but also very interesting issue that has happened in Tanzania. If I can just mention three things that happened in 2025 with regards to Islamic finance in Tanzania. Definitely one major thing is this regulation, the approval or the issuance of this regulation, which is called Non-Interest Banking Regulation 2025, which of course our speaker is going to shed more light on what it entails and its implication. The other thing that had happened in Tanzania in 2025 is, of course, the Sukuk issuances. We had seen Al-Baraka, Saradibi Al-Baraka Sukuk was issued, but also we had seen the maturity of KCB Sukuk, KCB Sahal Sukuk, that has matured as well in 2025. On the other domain, we have seen several forums, online and physical, that has happened in Tanzania, organized by ourselves, by Abrar Consult, but also by CIFCA, Center for Islamic Finance, Advice and Compliance. So these are major three development. And today, given that this regulation was just introduced at the middle of December, it deserves our attention to discuss it and look at its implication. And to discuss it, we're glad to have Madam Advocate Fatma Haruna, who shall be taking us through, and later on we shall have an opportunity to contribute or ask a question on or about the regulation and thoughts that will be shared by the Madam Fatma. Without taking much time, let me ask Madam Fatma to introduce herself, her firm, and take us through for the next 30 or 35 minutes, so that we can have time to have an engagement to discuss it further. The language of the session is both English and Swahili. Okay, so let's feel free to share our thoughts. Kwa hiyo tunaweza zungumza Kiswahili na Kiingereza kwa ajili ya mjadala huu, kwa kuwa unalenga zaidi Tanzania au mazingira ya Tanzania na inalenga zaidi wa Tanzania. So feel free, Madam Fatma, to use any of these two languages or mixing up, no issue. Most welcome, Fatma.
Asante, Brother Alfan. Assalamu alaikum, and good morning to everyone who has joined the call. Let me introduce myself briefly. Naitwa Fatma Songoro, ni wakili I specialize in various areas such as finance, technology law, investment, regulatory compliance. Now, currently, I work with a law firm called Victor Attorneys and Consultant, where I head the firm's technology law department. I am happy to share a few insights with regard to the new regulation ambayo imetoka ya non-interest banking. Brother Alfan aliniambia tu just a few days ago, and I was happy to have this moment to share my insight. And let me just acknowledge kwamba presentation yangu leo imetengenezwa na AI, and I think as we're going through, there's a lot of information, but I hope it will give you some sort of more understanding. With that, we can begin our discussion, and our discussion leo imekuwa titled Understanding Tanzania's Non-Interest Banking Regulation and Implication. And as Brother Alfan has said, the regulation were passed in December 2025 na zimekuwa operational, so they are already applicable currently. And when it comes to Islamic banking in Tanzania, I think, as you're all aware, kumekuwa na Islamic banking and product, but there was no a legal framework, which means it was a gap from a regulatory perspective and a legal perspective. And so this regulation imekiwa that gap because it is established some background na requirement and how Islamic banking or non-interest banking in Tanzania is to be operated. So I'm going to go into the regulation and the things that it speaks to, the key features that the regulation has. I will skip this slide, maybe. Yeah, so the first feature, the non-interest banking regulation, they have various definition ambazo zimekuwa zinaleta tija, I would say, in the Islamic banking sector. One, the law, it may provide that the definition ya non-interest banking business is any banking business ambayo ina provide product or services ambazo zinafata misingi ya sharia. And so when we speak about non-interest banking, now we're clear that we're speaking about Islamic banking. But also, the law pia the regulation, it can further could define what Sharia means. And this definition inaipa certainty, the meaning within the law. I understand there's a general understanding, lakini kwenye Sharia ingekuja in legal aspect, the definition is very important because it says Sharia will be defined as principle and rules of Islamic commercial jurisprudence. And so it has aligned the operations are non-interest banking with Sharia jurisprudence ambazo ni misingi na jurisprudence yote ya Islam. But also, when you go through the regulation, regulation may provide kwamba this regulation it apply kwa banks na financial institution that intend or offer non-interest banking business within Tanzania. And so what this means ni kwamba hii sheria haiko applicable to the banks, but it's also applicable to microfinance institution, any institution ambayo kwenye sheria ya the Banking and Financial Institution Act inakuwa defined in that law as a financial institution, then it has to comply with this law. And I think sometimes when we speak about Islamic banking, people think it just applies to the banks, but now the law has confirmed that the scope is beyond that to other financial institutions as well. We'll move to the next aspect of the regulation. The regulation pia it may provide for a dual banking structure whereby inaruhusu a financial institution kuwa established purely as an Islamic bank that provides Sharia compliant products only. I think in Tanzania we have Amana Bank, ambayo it's a fully fledged Islamic bank, but also it has allowed for conventional bank, which are bank that provide non-Islamic banking services establish a window which can provide Islamic banking product. In the market, we already have some banks ambazo zilikuwa ni conventional, lakini zime-establish window. We have KCB, we have CRDB, PBZ, and so hopefully we're going to see more banks get the license maybe for Islamic banking window, or more investor coming in to invest and start Islamic bank or financial institution. One of the key things ikija kwenye Islamic banking window that the law says under Regulation 5, it says that lazima an entity ambayo ina-establish an Islamic banking window iwe na a written commitment kwamba funds and account za non-interest banking business hazitachanganyika na zile za conventional business. And this is because when you have an Islamic window, it means you have your accounts, you have your activity ambazo they're not compliant with Islamic banking, and so it is not allowed kuchanganya hizo funds in your operation, and so the law has clearly kept that as a requirement, na hii ni one of the important compliance ikija kwenye sheria. And the regulation provide for how you can get the license. Kama una a window, unahitaji a written approval, and you'll be required to submit certain documents and information for the Bank of Tanzania to give you that license. Na kama una establish a fully fledged, it means you're making a new application to the bank to request that license ya operate a fully fledged Islamic bank. And so I think this is a good thing that the law has allowed both structures to be allowed in the market. Now, it's normally how most jurisdiction do it. So I will move to the next slide. One of the important aspect I would say ikija kwenye mambo ya Islamic banking is how the Sharia matters are being governed and how a body can actually oversee operations, Sharia, the Islamic banking. And so under the law may establish a Sharia governance structure, I would say. Na kawaida, banks waga zina board, ambazo board ndo kama the top authority that would govern the bank. But now, kwenye Islamic banking, kuna requirement ya kuwa na Sharia Advisory Committee, which is a committee that will see or will deal with now Islamic banking related matters. Mfano, mnataka kutoa bidhaa mpya or a new product in your bank ambayo iko compliant na Sharia, wao wata review. Maybe mnataka kutoa mikataba, they have this obligation, and the law imeweka several obligations, Sharia Advisory Committee, ambazo ni kama kuangalia Sharia compliance, kuangalia kama products, policy, mikataba, operations ziko in compliance with Sharia law na misingi ya Kiislamu. Lakini pia the Sharia Advisory Committee inatakiwa kuangalia audit na kuensure kwamba ripoti with relation to kama an Islamic window, hii part ya Islamic window iko in compliance. Na pia kuna normally waga kuna non-permissible income ikija kwenye benki za Kiislamu, ambayo hii kwenye sheria imekuwa defined as any any income ambayo imekuwa gained in a manner that is not in alignment na misingi ya Kiislamu. Kwa hiyo benki ikipata hela ambayo hiyo hela haifati misingi ya Kiislamu, that is non-permissible income. And so pia the Sharia Advisory Committee is supposed to oversee how your non-permissible income has to be dealt with na how inakuwa disposed. There's a slide later on, we'll go into it. So the regulations, the Islamic banking, zime establish the also qualification of who can sit in the Sharia Advisory Committee of the bank. Na imesema kwamba hii committee itatakiwa iwe na watu watatu at minimum, na hawa watu watatu lazima wawe na 3 key requirements. So one is that person or member wa Sharia Advisory Committee lazima awe na degree in Sharia Studies, Islamic Finance, Islamic Banking or related discipline. The other requirement ni kwamba lazima awe na knowledge, skills and experience in Sharia principles and I would say knowledge. And the last one ni lazima awe na a good integrity na good moral conduct. And so clearly we already know nani anaweza akafit kusit kwenye hizi sheria board, yani imeipa banks or people, financial institution guidance on how they can constitute their Sharia Advisory Committee. But sheria pia imetoa restriction ya kwamba if someone sits on one Sharia Advisory Committee of either an interest bank or financial institution, they should not sit in another Sharia Advisory Committee of another tena bank or financial institution. And so there is that restriction. Lakini pia sheria under Regulation 10, the board of the bank inatakiwa oversee the Sharia Committee requirement, kwamba wana meet hizo requirement na wana operate in line with Sharia guidance. Na board pia under the regulation inatakiwa kuassess the Sharia Advisory Committee periodically na inatakiwa report kwa BOT annually on the Sharia Advisory Committee members na operation na I think how exactly they are performing. And so with that said, the Sharia Advisory Committee ni inasaidia benki kuaddress mambo ya Islamic banking na inaishauri bodi ya benki on how to deal and how to oversee the Islamic banking business in the bank. I think when it comes to fully fledged Islamic bank, wao kwa sababu they only deal with Islamic bank, then it's easy kwamba board na Sharia Advisory Committee, they just are dealing with Islamic bank matters. Lakini kwenye Islamic window, the board would normally oversee also the conventional side of business, and so guidance watakuwa wanaipata from the Sharia Advisory Committee. That's briefly with regard to the structure, Sharia Advisory Committee. And then the other key feature within the regulation is the non-permissible income. So I had already highlighted it hapo nyuma, lakini now to go into what the law requires with regard to non-permissible income. One, sheria inasema under Regulation 23 kwamba if a non-interest bank has non-permissible income, then hiyo income lazima iwe separated na haiwezi kuwa treated kama income ya hiyo benki, kwa sababu hii ni income ambayo kwenye misingi ya Kiislamu benki haitakiwi kubenefit au kuitumia au attribute kwao. And so the regulation imeweka that requirement of it being segregated, benki ikipata non-permissible income. Lakini pia imeweka utaratibu wa kudispose hiyo non-permissible income. So the regulation has the regulation has a provision nikiwa na non-permissible income, itabidi hiyo non-permissible income na iweza tu kuitoa ikiwa inaenda kwa charitable organization au people who are in need. Sasa kwa sababu kawaida inawezekana labda benki ikawa inatoa hiyo hela inaenda kwa watu ambao wako related au wana benefit from the bank, sheria imeenda mbali kuweka restriction ambazo katika hizo restriction inasema hiyo income ikiwa inakuwa disposed, the bank or financial institution itahakikisha kwamba haiendi kwa mtu yoyote au institution yoyote ambayo the bank can either benefit either directly or indirectly from that donation. Pia imekataza a bank ku make a disposal maybe to a charitable organization ambayo inaweza result into a shareholder, a director, a member au a committee au employee wa hiyo benki kubenefit. Kwa labda mfanyakazi mmoja ana charity organization yake au labda someone they're related to, so I think the law has also kept that restriction kwenye hiyo disposition ya non-permissible income. Lakini pia sheria imekataza hiyo non-permissible income kuwa treated or considered as corporate social responsibility of an Islamic bank, because hiyo income haitakiwi kutumika na the Islamic bank in any way. And so an Islamic bank cannot claim that to be their corporate social responsibility. And inamaanisha now, if that income is given, it's given on a charity basis, yani purely kama charity. Now there's no any CSR reputation that can be accredited to the bank. Lakini pia sheria imetaka the Islamic bank or financial institution kuwa na due diligence na kuensure kwamba hiyo hela inapoenda kwa any individual charity organization, kwamba huyo mtu ana fit kupokea hiyo hela kama ambavyo sheria imeainisha. And so I think this is one of the provisions that is inatoa good guidance, unlike before there was no law. I think maybe Islamic bank were struggling on how to dispose is non-permissible income, but now the law imeweka clearly how that non-permissible income can be disposed and who can receive na nani ambaye hawezi kufit kupata hiyo income. I'll move to the next slide. So the other key feature within the regulation is the financing model or ring fencing. I think one of the thing that I think I would applaud the regulation with ni kwamba haijaweka modes of finance pale ikazilist au ikazitaja, but rather imeacha openly for the Islamic bank or financial institution could decide through their Sharia advisory committee the kind of financing they want to be doing. Lakini Sharia imeruhusu Islamic bank institution to engage in trading and holding tangible asset, which is a big thing because there is normally a restriction for banks to maybe engage in trading. Lakini sasa kwenye Islamic bank imekuwa allowed. Pia allow for risk sharing through partnership or equity participation for Islamic bank. Na pia provide for profit sharing investment account between the bank and account holders. And so now we can say that legally we have a basis for easy financing model or structures that Islamic bank normally provide. But pia Sharia imeenda further with regard to Islamic window, kuweka some key, I would say, like restriction or guidance. One, regulation 8 ya Sharia inataka an Islamic window to have separate books of account and record between the conventional side and the Islamic side. I think for accounting purpose na requirements za Sharia, this is how it's required, na Sharia imeeko the same. Lakini pia sheria imetaka ukiwa wewe ni conventional bank na Islamic window, you need to have a dedicated unit within your head office that can actually monitor the operations. Islamic bank itafuatilia masuala ya Sharia Advisory Committee, itafuatilia policy development, compliance, and all this. And so I guess this is one of the aspects that the regulation is trying to ensure kwamba maybe usiwe na Islamic window alafu operation within the head office hazina a unit that can actually follow through. But I think this is good that the law may provide for it. Lakini pia if you read the law, na one of the requirement under the law inasema if you're a conventional bank na unaanza au una provide an Islamic window, you need to have a core banking system that is actually fit to Islamic Sharia product and transaction. Because normally the core banking system maybe can be designed for conventional operation and product. So isije ikawa unatumia the same core banking system to fit into Islamic services and product. And so the law has clearly kept that requirement. And then the other, I think, feature ya hizi regulation ni kwamba the regulation has kept certain disclosure obligation kwenye Islamic banking operation, key being under Regulation 14 ambayo inataka kwamba an Islamic financial institution ikiwa inatoa audited financial statement yake, then they need to include certain information. One, ni information of any non-compliance with the Sharia ruling ambayo ilitolewa na they need to state the reason why they did not comply with that Sharia ruling and how it was addressed. I think this is for transparency na kuweza kuweka vitu vio vinajulikana if there was any non-compliance for stakeholders, for their consumers, kila mtu aweze kujua. Lakini pia the law imetaka zile statements they also speak to the amount na nature of activity ambazo zina generate Sharia non-compliant income and the manner in which hiyo income imekuwa disposed na measures ambazo zinachukuliwa kuprevent tena hiyo income ambayo ni non-Sharia compliant kuwa generated. And I think that's also good. And then pia in the audited financial statement, they have to speak to the procedure and eligibility criteria ambazo zilitumika in distributing the Sharia non-compliant income. So I think this requirement of disclosure is also important within this legal framework. But also, under Regulation 19, the law has required that any financial institution ambayo inatoa Islamic services, it needs to make a very adequate and timely disclosure to investment account holders na to the general public of all material na information ambazo ina relate na hizo investment account and how it is managed. Kwa hiyo kama mimi nina investment account with an Islamic bank, I need to have clear understanding with regard to that operation. And so I think those are some of the very key features within the regulation. And I think as I was going through the regulation, I had just seen a few things that I think are opportunities. One, Sharia imeruhusu Islamic bank that have a window who outsource Sharia advisory services. So in the banking framework, there is normally a guideline ya outsourcing na kuna utaratibu na certain restriction, lakini kwenye hii regulation imesema kabisa clearly kama una an Islamic window kwamba una operate wewe hautoi tu huduma za Kiislamu, then unaweza outsource hizo Sharia advisory services subject to approval ya BOT kukuruhusu outsource your services. And so I think this is an opportunity for people who have the expertise and skills to provide Sharia advisory services kuwa engaged or maybe wanaweza wakawa engaged. But also Sharia may provide that Islamic banks or institution lazima ziwe zinafanya an audit ya Sharia compliance. And so I think people with expertise will be required in this area kufanya hizo Sharia compliance audits. But I also think ukija upande wa dispute settlement or there's going to also be an opportunity for people who have maybe understanding of Islamic finance and product who play a role into settling dispute in this legal framework. And so those are just a few highlights. And I'll move to, I think this is almost my last slide. So this slide highlights or speaks to the penalties that zimewekwa kwenye e-regulation. And I think the penalties are very wide, I would say, and they give the Bank of Tanzania uwanja upana kufanya maamuzi na kutake action in a timely manner to ensure that a bank or financial institution adhere to the Sharia compliance au Sharia. So some of the penalties ambazo BOT inaweza ikafanya, inaweza ikaprohibit an Islamic bank kudeclare au kulipa dividend kwa shareholders. Pia inaweza ikasuspend mfano the Islamic bank inaweza kuwa suspended issue letters of credit or guarantee, au inaweza ikasuspend access to certain financing facility au lending au investment activity au capital expenditure au other suspension with regard to privilege za kupokea deposit mpya. And so if you look through all these penalties, nadhani BOT amepata now a legal basis of implementing or enforcing them. Lakini another penalty which will be heavy would be the revocation of the banking license. So under the law, BOT sasa hivi anaweza revoke leseni ya Islamic bank kama haita comply with the regulation. Lakini pia they also have the powers now to deal directly with a defaulting director, officer or employee of an Islamic bank ambaye anaweza akawa haja comply na sheria. So one of the penalty powers ni kwamba they can suspend huyo mtu, na pia they can disqualify any person from holding a position in any of the non-interest institution in Tanzania. And so I think these penalties, they were important for the implementation of Sharia, and hopefully BOT will be able to properly supervise and govern the Islamic banking sector, I would say, within the country now that there is a proper framework. I think that brings me to, so there were key things maybe that we can discuss within the discussion as we're making discussion. I'll just highlight a few. I think from a legal perspective or legal side, the law established the Sharia Advisory Committee, yes. Lakini there is nowhere in the regulation that says the Sharia advisory decision maybe is binding on the board. Although, of course, from a governance perspective, that might also be a challenge, but it might bring some, like, I would say, legal issue with regard, it brings legal issue to the status of that decision au maamuzi wanayofanya the Sharia Advisory Committee within matters that are related to Islamic banking. I think the other key one that seems to be missing maybe from the regulation ni having a central Sharia Advisory Council ambaye ata oversee matters of like Islamic banking. I'm not so sure if internally BOT has any department maybe ambayo ina specialize or inaweza ikawa ina make Sharia ruling or decision, because I think in Uganda or in other markets, ikiwa kwamba Sharia advisory matter just end up being decided or rulings zinatoka tu kwenye Sharia Advisory Committee, you might find one committee ya benki hii in a different ruling, benki hii in a different ruling and different treatment. And so legally that is not proper kwa sababu it might result into different approaches and maybe confusion to hata consumers, labda committee hii inasema hichi, huyu anasema hichi. And so if there was one body ambayo inaweza ikawa inafanya that ruling and maybe align hizo certain matters within the Sharia Advisory Committee, then that would be important. But I think because this being a regulation, maybe BOT could not now establish a department or something kwenye regulation kama sio an act, but I'm not so sure. But I also understand that BOT is going to issue guidelines. Maybe they would provide further guidance, but hopefully maybe in the few days to come we'll hear more about if there's a Sharia Advisory Council or anything to be established or any entity that can do that. Yeah, so I think this brings me to the end of my presentation on the regulation and the key aspects of it. And generally I can just say kwamba hizi regulation um, zimekuja and it's a big step or milestone, I would say, to the Islamic banking sector because they have now established a legal framework that can be followed and can be enforced. Now, because Islamic banking has been already in the market, BOT already has the experience, and I think they already have some ways that they're already addressing some of these matters. And so we hope to see Islamic Bank perform or like grow now. In Tanzania in the past ilikuwa inasemwa hatuna sheria, tuna restriction, hicho hakiko clear, it's hindering the growth of the market. But I guess this is a good start, and hopefully would see more guidance or um, 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 regulation that speaks to Islamic banking. And so that brings me to the end of my presentation, Brother Alfan.
Okay, thank you so much for this very wonderful presentation. You have really done a good job. We sincerely thank you for that. Now it is time for discussions and Q&A. But before I let people to ask, let me also share my few thoughts on this regulation. First, I think I congratulate the Bank of Tanzania and through that the government of Tanzania for this milestone. It is uh, one of the gaps that we had since we started in 2008 Islamic banking, and it had been always an issue people talk about that as a weakness within our operating then, that we don't have a regulation. But uh, years along the line, this has been addressed. However, there are still things that needs to be worked on. That being said, we need to take note as well that there are other regulations, particularly tax regulation, that have been changed in the past. So this regulation doesn't come as the only regulation that talks or that tries to put into perspective the Islamic banking business. But we had seen some laws in previous years, income tax laws, that were also changed in order to provide a fair environment for Islamic banking to operate in the countries. Always there was the issue of double taxation here and there, but these were addressed in the previous finance bills that were passed a few years ago. So we are really filling these gaps. And it is good that in the country, in the region here in East Africa, we have delayed, but not that much. We had already, Uganda had done its regulation in 2018. Of course, Kenya has been adjusting it is acts, banking acts here and there. It hasn't brought a standalone regulation, but Kenya has always been amending its banking act, its income tax laws. In that manner, it appears that's the approach Kenya has taken to just amend the existing regulation rather than come up with a standalone regulation for Islamic banking. So we are in the bloc East African, but we have different approach, and this exemplify the global picture when it comes to regulating Islamic banking. Different countries have different approaches. We even have countries that don't have regulations still. So we have country with the regulations, country with standalone regulations, and then countries that have a kind of a mixed regulation or just a hybrid or adjusting the existing regulations to fit the Islamic banking business. One of the things that is quite clear is that Tanzania allows full-fledged and Islamic windows to operate hand-to-hand. These regulations has also provided a wider spectrum on product development. As you mentioned, when it comes to Islamic modes of financing, it has really left to the experts, which is the Sharia board, together with the bank internal units, to basically come up and see what mode is suitable, and the bank hasn't put any hand into that, which is very good, very good thing, because it allows now the room for innovation, adaptation, and things like that, rather than going back and forth, engaging the regulator if there were restriction or there were limited modes. So that's a good thing. It's a good thing as well to see that the regulation has now officially put on the shoulder of internal audit the Sharia audit issue. Carrying Sharia audit is critical in ensuring the Islamic banking business is Sharia compliant. And though organization used to have different approaches, this role has been done by Sharia department in some institution, internal audit, but now this function has fully been assigned to the internal audit to do Sharia audit. And this now brings a challenge to the existing internal audit departments particularly within conventional bank with Windows. They need to come to speed to learn and be able to now assume this role, because as far as I know, some of these departments lack the expertise, and that's why they were not auditing Sharia banking business. But now they need to really come to speed because it is on them. It is their responsibility. Risk management as well. The risk management departments now also have been assigned to make sure that they understand the specific inherent risks that are found within the Islamic banking business modes, among others. And then it is their responsibility to be able to make sure there are proper controls for that. So much that is so good in this regulation. Frankly, I received this regulation wholeheartedly, despite that there are areas which have been left, as what you have mentioned, like dispute resolutions and maybe offenses. The regulation talks about penalties, but doesn't talk about offenses. If you don't have a Sharia board constituted, what is an offense? Is that an offense or not offense? So the regulation is quiet on what are offenses, which are punishable with these penalties. Because I know it might happen that you had started the bank, you had a Sharia board, but their terms, as has been limited to maybe 9 years, they have expired. And the board takes time to appoint the new Sharia board members. Will be there any consequences for that? Because as we speak, I know one financial institution, without mentioning where, that the Sharia board tenure had ended, and it has to be either renewed or new members to be appointed, and they are yet to do so. They are yet to appoint the new Sharia board members, and it has been for some times. They're operating like that. Will that constitute an offense? I think the regulation needed to capture this issue. What are offenses punishable under this regulation, rather than just mentioning penalties without being clear to the offenses?
Brother Alfan, if I can speak to that.
You will bring your thoughts. Let me just finish.
Okay.
Yeah, you will talk to it about it. So that's one of the things, perhaps. Then there could be others that I feel as gaps. But I would like, after saying that, now to just ask a few questions to you, and then open the floor to the participants. The regulation talks about three members to constitute the Sharia board. We normally see other regulations saying at least three. At least three. This regulation hasn't said that. This regulation looks to have confined the number to three. But that's my take, because I simply say Sharia board will be constituted by three members, leaving a room of interpretation as to whether it is only three or at least three. Other regulations normally says at least. What is your take on that? Then, is this regulation, in terms of implementation, it has to be now, it has come into force and it will apply to, for example, when it comes to financial reporting. So the banks that have Islamic windows, they will need to comply to this regulation as they prepare the financials for 2025. That's also a question that I'd like to start with. So these are two questions to you, Fatma, but you can also comment on the issue of offense. You can respond to these, and then we can now open to the participants.
Uh, so I think I will start responding to the one on members. Of course, as you're saying, the regulation zimesema the Sharia Advisory Committee will consist of three members ambao watachaguliwa na body. And I think tukiinterpretate strictly, then it is three members. Lakini I think kama I would say any institution maybe inahitaji zaidi, I think this is something that they can get as they can ask BOT na maybe BOT wanaweza wakaruhusu. And then with regard to the one on offense, so kawaida when it comes to laws, regulation, I establish offenses that can be done under the act. Na ukiangalia kwa sababu an offense is something that can only be declared in court, lakini BOT hawezi kusema mtu amecommit an offense. Yeye anaweza akachukua tu for non-compliance, which is the provision ambayo inaongelea the penalty, inasema in case of any non-compliance, na pia subject that section ya penalty to the act your banking and financial institution, which means if someone does not comply kama hana a Sharia advisory committee au hajafata kitu chochote, that is non-compliance, and BOT inaweza revoke leseni, inaweza enforce any other penalties that they deem fit, lakini pia the bank will be subjected to offenses ambazo zipo kwenye act ile ya banking and financial institution. However, I hope maybe the act will be amended somehow mwaka when the finance, I mean when we have amendments, but as it stands, nadhani for BOT na what they can do with non-compliance, penalties zimekuwa established vizuri, lakini offense, it will have to be the act that establish na kuweka labda kama mtu akicommit offense hii, labda penalties zake zinaweza akaambiwa alipe bilioni hii au milioni hii. Yeah. And then with regard to the financial reporting, I think because the law has been operationalized, then tunasema kwamba they will be subjected to this requirements na kureport hivyo, lakini maybe BOT would give guidance, I think, but legally, yes, that is what they're supposed to be doing right now. I hope nimekujibu Brother
Yes, yes.
Hausani.
Thank you so much for that. Now we are opening it to the floor. There was a question on the chat, has been answered, but I need to also expound the example. The question was, under what circumstances can Islamic bank find itself getting some non-permissible income? Mr. Sebi responded to it, which is I'm in agreement. But in addition, we normally have penalties which are called which are resulted due to delays. When a customer delays to pay under the contract, there are charges, and these charges are normally non-permissible according to Sharia. So they are supposed to be taken to charity. So this is additional example to what Sebi has said. But a third example that comes to mind is also under correspondent banking. Bank have a correspondent relationship with the other institutions in order to facilitate interbank settlement and so on. And they keep balances, they keep money to these accounts. And sometimes those balances within the correspondent banks are paid interest, which will also qualify to be a non-Sharia compliant. So it can arise from a transaction being non-compliant, and that is declared by Sharia board. It can arise out of delays, penalty charges for delay in payment, and also it can arise from interest paid to the correspondent account. These are three major sources of non-Sharia compliant income that has come to my mind. Now, dear participants, I will let you ask a question if there is any, or if you seek a clarification. This is your time now. We only have 5 or 6 minutes to close the session. If you have a question, please either raise your hand or just unmute. Introduce yourself, your name and organization, and then ask or seek clarification.
Brother Hausani, mimi nilikuwa na swali if no one has a question to you.
All right.
I wanted to ask with regard to assessment ambazo the board is supposed to carry out on the Sharia Advisory Committee. I think the regulation says it assess if they are fit, if wanna qualify and all of that. So I want to know, maybe from your experience and other jurisdiction, hizo assessment, what will they be based on? Because I assume qualification mtu anazo ni kwamba amezilose hizo qualification au what normally maybe would result into that assessment?
Yeah, very good one. On corporate governance, board needs to be assessed in terms of their performance. The board and board members. This is just at the board level. I'm giving you the bigger picture, the board level. Then when it comes to even a Sharia board, it has to do two appraisals, two assessment. Number one is the board itself, the appraisal or the assessment on the board, and also there are appraisals on the Sharia board members assessment. And this is sometimes done by outsourcing somebody to carry the board and the board member assessment, or sometimes is done by the board, by the main board, by some members who are delegated by the body to carry out this. And apart from the issue of qualification, it is looked upon whether the board has met as required by the regulation. So this will be some of the things that are checked. Has the board met? Were the notices given on time? Where the all operating procedures are in place in terms of the minutes, directives being escalated, and so on, to measure the effectiveness of the board. But also, when it comes to Sharia board members, they will be assessed in terms of their attendance, in terms of their contributions. Are they contributing to the deliberations? Are they prepared enough to? Are they give? Do they give time to the matters at hand? Issues of conflict of interest, are they properly declared, and so on and so forth. So normally, actually, I would say some banks normally used to do this after 3 years, towards the end of the tenure of the Sharia board members. But this regulation requires it annually, and of course, some institutions have been doing annually as well. I know a number of institutions that carries annual board assessments. And sometimes these Sharia board assessments are peer to peer. So there will be questionnaire that's sent, and then board member will evaluate each other. So there are different technicalities, and the regulation hasn't said specifically how the assessment should be done, but I believe the corporate experts are aware of those technicalities on how to carry board assessment and the board members assessment, and in that regard, it has to be done according to the industry practices. Um, so yes, besides issue of qualification, there are other issues, several issues that needs to be assessed to measure the effectiveness of the board. I hope I've answered you.
Yes, Madam Fan, asante. So I think the general corporate governance, like
Yes,
verification and
yes,
assessment.
yes.
I don't like what peculiarly specifically to like Sharia matches,
Yeah,
but okay.
yeah. It's generic corporate governance issues. Yeah. Yes, Maimuna, you can ask.
Assalamu alaikum and good morning. My
Alaikum
name
salam.
is Maimuna Kadhi. I work at the Central Bank of Kenya.
Yeah.
And so basically for me, it is not a question, but just a comment. First, to congratulate the team from the Bank of Tanzania, Fatma and team, for coming up with these regulations. So in Kenya, we are also thinking, we have been on the drawing board for a long time. So mine is just to say that we will be watching the Tanzanian space, because as Fatma had alluded, it has been raised as a concern for years that the reason why Islamic finance is not growing in the country or in the region is because of lack of regulations. So like in Kenya, stakeholders have been toying with the idea on what exactly is limiting in the current regulations that is impeding the growth of Islamic finance. Because also in Kenya, we have seen a very slow growth rate. So yeah, so my comment is just first to commend the Bank of Tanzania team, and also we will be watching their space, and hopefully we will also have regulations. Thank you.
All right, thank you. With that, Maimuna, just to clarify, Fatma Songoro, she is an advocate with Victory Attorneys. She's not coming from the Central Bank of
Oh,
Tanzania. Yeah.
thank you. Thank you for that.
Yeah. Yes, we have Senkro. We are short of time. Senkro, you will be our last contributor or a questioner or somebody to ask. You want to ask? You can unmute.
Thank you. Assalamu alaikum.
Wa salam wa barakatuh.
Naitwa Mwinyi Sekro. I am from Amana Bank, Tanzania. Yeah, so I had two issues. Kuna issue moja hapa naiona rather labda ningeomba kupata clarification kutoka kwa brother Alfan.
Yes, please.
Naona regulation hazijazungumzia issue ya external audit, sheria ya external audit kwa ujumla wake.
Yeah.
Nimejaribu kupitia yote, sijaona kama kuna requirement yoyote.
Yeah, you're right. That is not featured in. Yeah,
Yeah.
but I think is a gradual thing, I would say, because even now putting internal audit departments, giving them the task of getting Sharia audit, is also to some organization it will be a daunting task, and I hope when you understand. So. But external auditors, they will need to prepare because it is coming. If internal auditors are required now to carry Sharia audit, then um, in parallel, the external auditors will maybe in the coming years required to do the same. But you're right; it's not mentioned at all. The role of external auditors with regards to Sharia audit in this regulation. Yeah. You had two, you said that is one, or is the two mentioned?
Yes. No. I have also the second. Kuna sehemu amezungumzia kwenye issue ya liquidity management kwamba Windows pamoja na hizi Islamic Bank zote kwa ujumla wake zitakuwa zina adhere strictly na ile liquidity management regulation ya mwaka 2023 ambayo kwa namna moja ama nyingine inaweza ikawa sio compliant na sharia. Sasa naona kama hawajaweka utaratibu mzima kwamba kutakuwa na sharia compliant liquidity management, namna ambavyo inaweza ikaangaliwa, au tutaendelea kufuata ile ambayo imekuwa inahinda pia sometimes hizi Islamic banks.
Yeah, I think it stands as per the regulations. So far, it looks that it refers that matter to the existing regulation. So the issue needs to be raised, I believe, to the Bank of Tanzania as to the specifics that needs to be exempted or needs to be introduced to allow Islamic banks and windows to operate more effectively. So an engagement still needs to be required on not just that and many other that might have been left untouched and needs regulators' attention. So that is what I would say with regards to that. Regulations are evolving documents, and they are never perfect. They're never perfect. Even those developed markets, Malaysia and other places, they have the acts and regulation, but still over years, things have been evolving. So we need to applaud the current move, but what is still missing, we need to still engage and find a way out. Of course, I know and the lack of adequate liquidity instruments, as what Sebi asked here, is as a long cry, which requires to be addressed as well by the Bank of Tanzania. It needs to develop Islamic liquidity instruments so that Islamic banks, Islamic windows can be able to manage properly their liquidity, either short or excess. So it's a step so far, but I hope will not take a decade, will not take 10 years to fill these gaps. That's my hope, and I believe with the current governor, with this measure, I think I would have an optimistic attitude that things might move. Let's engage further. I don't know what Fatma has to say.
I think, Brother Fine, I align with what you're saying, because as the regulations are easy to amend, they're very flexible, na ingekuwa ni act kweli hapa tungekuwa tunasema sasa mpaka ije iwe amended might take time. And so all these gaps, I believe BOT would find ways to address them. Au wanaweza wakatoa guidelines that maybe can provide some leeway to Islamic banking and financial institution. And so I guess we just have to engage now, kuwapa feedback, and hopefully would see more regulation and guidelines coming out for Islamic Bank in Tanzania.
With that, we have come to an end. There's much to discuss, but our time is already out of time. So let me take this opportunity once again to thank you, Fatma, for this wonderful presentation, and for all our participants who have made time to be with us to just follow through on this discussion. And with that, I thank you all, and I wish you a good weekend. Inshallah, the recording of this session will be uploaded on Abrar Consult YouTube by Monday, inshallah, and will be shared to some of the groups, particularly SIFCA group, which most of us are a member there. So we'll be able to get the recording and be able to maybe share to those who didn't make up to this session. Thank you all, and have a good weekend. Bye bye for now. Assalam.